Good morning. Welcome to Kotak Securities weekly fundamental podcast. This is Rini Mehta. Last week, Indian stock market returns were in the positive territory despite some global concerns like elevated interest rates, geopolitical unrest in the Middle East, and continued stress in Chinese real estate sector. So, Sensex and Nifty and even BSE Midcap and Smallcap indices saw gains last week. Amongst sectors, if you see, BSE Realty, metals and energy posted healthy gains during the week. Contrasting this was the BSE IT index that saw decline during the week. Also, a few IT companies posted their second quarter results last week, and the outlook on discretionary spending continues to be weak. Now, looking at the overall other macro indicators that affect market, one of it is crude oil prices. They recovered slightly last week from the lows of the previous week, and the US 10-year Treasury bond yield, which is a key indicator that investors look at, corrected from the recent peaks. From macroeconomics, in India, September CPI inflation, that is retail inflation, moderated to 5% from 6.8% in August month. So over the next few weeks, market participants can expect sector or stock specific action depending on the second quarter financial performance and management commentary. Now, if we come to the foreign investors' participation during the week, FIIs continued to be net sellers to the tune of rupees 10,929 or 10,930 crores so far in October. FPI flows so far in October month were negative for emerging markets. All emerging countries witnessed outflows. Now I'll give you some result updates and stock ideas from our research desk. First is HCL Technologies. So HCL Technologies reported muted although inline revenue growth. Its EBIT margin was significantly ahead of our estimates. On expected lines, HCL Technologies cut FY24 organic revenue growth guidance to 4.4 to 5% from 6 to 8%. Even the revised guidance seems aggressive at the upper end of the band. So we expect HCL Tech to be a beneficiary of vendor consolidation initiatives and cost optimization deals. And so we have a buy rating on the stock with a fair value or target price of 1,410 rupees. Secondly, SDFC AMC also reported its results last week. Its second quarter results were near perfect, with both headline and core earnings up by 20% year on year, along with strong operating metrics such as fund performance, customer addition, SIP flows and yield expansion. Its strong outperformance versus the industry is further accelerated by industry tailwinds. So we have add rating on the stock. You can consider adding the stock to your portfolio with fair value of rupees 2,900. Lastly, our pick of the week is CMS Infosystems. We have a buy rating on the stock. We believe the company will be a key beneficiary of industry tailwinds and first is an increase in the number of ATMs. Second is higher ATMs outsourcing by banks. Then third is rising growth in organized retail. Fourth is opportunities in brown label ATMs. Fifth is fresh opportunities in deep tech, AI and IoT solutions. Sixth is spreading wings to grab opportunities in NBFCs, insurance and retail. Seventh is ongoing industry consolidation. Eighth is increasing compliance requirement and hence better pricing scenario. The company is aggressively focusing on businesses where it can be a market leader or a dominant player. So we have initiated our coverage on CMS Infosystems with a buy rating and target of rupees 419. So guys, that's all from my side today. See you again next week. Thank you. Signing off.